the same time, what was happening in Egypt, like or the Middle East, where investors are treated like gods. Although most of us as investors are completely clueless, you founders think that like we're saying the right thing because surprisingly we might know better. Why that? Why would we know better than a founder who's actually spending most of their time every day?
That was the voice of Tarek Fahim, investor and founding partner at Endure Capital. I am your host, Ali Zwail, and this is the Startups Arabia podcast, where you learn about the Arab startups ecosystem from the best founders, investors, and operators in the region. Welcome to the Startups Arabia podcast. Today, as our guest, we have Tarek Fahim from Endure Capital. Tarek has studied engineering and business and management at Ain Shams University, at the AUC, and at MIT. At Endure, he's invested in some of the most iconic startups of the region. Companies like Careem, like Breadfast, like Wuzzuf, and also it's a cross-geo fund. So they've also invested in companies like Boom Supersonic, which I love, by the way, Aspect Biosystems, and he's also co-founded an NGO called Al Buraq, which has done a lot of work here in like civil society in Egypt. Now, here's our interview. Well, welcome, Tarek.
Welcome, Ali. How are you?
I'm good. Great to see you today. And maybe a good way to get started is to just for you to tell us, like, briefly your story about how you got into the world of venture.
So that was, I really don't think if anybody in the venture world got by design into venture. I think most of it like it happened like that. Maybe like you start liking some companies, doing some angel investment on the side, maybe getting an advice from some mentor saying that you know what, you should be starting this company, you should be doing this or that, and this literally what happened because when you look at venture and people who are working in venture, they're coming from diverse background, and that makes a lot of sense. Like, you know, one of the most famous venture capitalists worldwide now, or who used to be because he's not currently active as much as he used to be, is Mike Moritz, for example. So Mike Moritz used to be a reporter. He used to be at Times Magazine. So
Oh,
so now,
interesting.
yeah, this is Sir Mike Moritz, basically.
Yeah,
Uh,
I mean, everybody talks about him as a like a legendary guy and a great board member.
He is, and he is a reporter.
Yeah.
He started as a reporter. At the same time, in the same company, which is Sequoia Capital, the other leader of Sequoia Capital, Doug Leone used to be a sales guy. A sales guy.
And what about you, Tarek?
I was a software engineer.
What's your story?
I'm a software engineer. I started working my first job as part of a company in Silicon Valley called Aptix with a legendary guy at that time. He was the guy who invented something called FPGA, specifically technology. It's called SRAM. I've worked with him for several years. I've learned a lot from working there. We were like a small team in Egypt, connected with some bigger teams in Silicon Valley and some other countries. We were serving and supporting and selling our technologies for a company called ST Microelectronics. So back in the day, ST Microelectronics was a big thing. I think it was year 2004 or 5. This company had to go to Chapter 11 for several reasons. None of them is related is related to actual business or sales, but primarily personal reasons.
What did you do? I mean, yeah, did you decide to leave then?
Of course, that was part of of what I wanted to do, and that everybody was deciding to leave. But and I've learned that the hard way because I've been there. Because here's the thing,
Yep.
this is a lesson that I've learned, and I've learned like costly. The best people, unfortunately, the best people are the first to move out of any company when things wrong happen. So you need to make sure that if anything's happening, you need to make sure that you communicate it in a very clear way. You engage your best people as much as you can, and you let go. Unfortunately, but you let go all the dead weight or like the extra fat of the organization, and you need to do it really fast. So maybe you cut the
Right.
salaries of everybody who's not that contributing, but and at the same time you increase the salaries or you increase the benefit of your best people, because those guys are the first to move out of your company. That was a very interesting approach or an interesting lesson to learn. Again, it's not the only way. I've seen other ways later on that happened and worked.
Yeah.
But again,
So
it's
yeah.
it's a little bit counterintuitive, like how you in a time of real hardship, how you're gonna be increasing salaries. Sometimes, yes, that's actually
Hmm.
what you need to do exactly, is to increase salaries at time of hardship, but to increase salaries for very
Yeah.
very few people at the expense of letting some other people go.
You started as a software engineer. I'm guessing you moved to other like software engineering roles first, and then did you somehow move into venture directly, or what happened then?
No, actually, my last job as a software engineer, I was part of IBM team who's building embedded software systems for automotive industry. So
Hmm.
I decided, you know what, I don't want to do this anymore. I want to be more into maybe management. It's not just like, again, you were managing smaller teams, technical teams, and things like that, but
Hmm.
not like really deciding on the strategy, what's our direction. Yeah, maybe working some tactics, maybe working organizing things and things like that. But in reality, you still you don't have a lot of visibility about what's happening and how you can be contributing big time. And coming from a startup that used to be working with everybody in a flat hierarchy, and going later on to work with IBM and the French, which basically both worships a hierarchy in a big in a big way. You can imagine how it was challenging times for anybody to move from
Yeah.
this to that. So I decided, you know what, maybe it's time to leave. I left. At that time, I started I got scholarship to start my MBA. It wasn't a full time program, although I was like taking 3 courses per semester because that was the mandate of the scholarship. Yet it wasn't a full time. And after the first semester, I decided, say, like, when you don't have money, what basically you do is you start doing services, because services doesn't don't need like an extra
Capital.
capital that you start with. So I started talking to some of my friends, saying, guys, you know what? I've just studied marketing and I know something very cool called the 4 Ps. Why don't we apply? So yeah, it's a very humble beginnings, working with people, trying to get your hands dirty, having practical understanding about different products, about different things. You learn few things like in your studies. At the same time, you go and try to apply it in a very interesting market like Egypt or the Middle East, which was quite interesting time during those days. Later on, I was joined by a friend of mine who used to be a consultant in one of the big four, the big four, but not the big four in accounting, but the big four
Big
consulting.
four consulting
Yes, which is
companies.
like
Yeah.
McKinsey, Bain,
Yeah.
BCG, and Booz, basically. Or now, like
Mhm.
Booz, they have a different name every month. I don't know what their name this month, but
Actually, I can't remember it.
yeah, I think it's strategy and they've been like this name for
Yeah.
what, like maybe 2 years or something. Anyway, so this guy, he used to be working in this,
Mhm.
and he just left. He said, you know what? You're good at technology, you're good at math, you're good at finance. I'm good at management, and I'm good at business. So why don't we join together and build our own consulting practice? So instead of like doing what I used to be calling free consulting, like, or free freelancing, like, let's do like real thing, and hopefully we maybe some crazy guys would pay us to it, like for our consulting expertise. And guess what? Yes, we got some crazy guys paying us. Surprisingly, one of them was one of our early clients at this company was Intel. We've worked with Intel in Egypt in many projects, and later on we've worked with Intel in the Middle East, and that helped us like to scale our business. So we started by two consultants, just myself and my friend. In less than 2 years, we were 30 members. 30 members. People come from McKinsey, people having their MBA from Haas, people from BCG, other people from local consulting firms. So it was quite
Wow.
interesting. So we managed to to build a relatively reputable consulting house. At that time, we said, you know what, we still want to work with smaller companies. At that time,
So why
at that
think about
time,
SMEs? I mean,
because we like it.
they don't have money, they can't afford the margins.
Of course, but we like being there because we are an SME ourselves and we like working with smaller companies. So the challenge here, how can that we
Hmm.
needed to solve, how can we help them in a meaningful way, yet in a feasible way. So
Right.
we got
In a
comfortable.
profitable way.
So we said basically, here's the thing: we will work with them, and in a 3 to 5 years contract, we will be only
Mm-hmm.
taking very minimal, like retainer fees or something like that, very minimal, just to cover our cost, and sometimes it's below our cost. Yet we have for this 3 or 5 years, we have an agreement to take a percentage of their net profit for this 3 to 5 years. So at the very beginning, it's almost like you are investing your time, you're investing your effort, you're working in your turnaround, getting them the right, positioning them the right positioning, helping them in restructure, helping them in their business development, deciding
Mm-hmm.
on the strategy, like almost as if they are semi outsourcing their management
Right.
capability or their management layer to you. And for that, you're working with them, you're building the capacity, and you are decreasing your involvement while you are getting revenues and from the net profit that you're getting out of this contract. So you couldn't do like a one
Got it.
year contract at that time. And that give us like really good thing because it help us in predictability. In services, every year, every year you need to have your wheel drivers. So I,
Is you're starting from the beginning.
of course, so you need to
Every year is a fresh start.
So you need to
Yeah.
have your real drivers in a way. So either you have your real driver by big chunk giant who's actually outsourcing most of their work, or taking your services, like, and you do all your production based on that. This one way of doing it, and we had that, and we had this. Or the other way is actually to have many small players that in a way you can predict or control their cash flows or their income, so you don't have like a single point of failure, because most of the people who are working with only one giant, sometimes it's easier, sometimes you grow with them, and it makes a lot of sense, but you always have a single point of
Yeah.
failure. Yeah, so basically, so those guys, when we start and doing this, part of what we offered them was actually trying to get them investment and trying to get them money at that time, because you need money in order to get things.
Mhm.
So part of it were actually coming from introduction that we made to some of our friends and things like that. But the other interesting part actually, that the money came from us. It came from our other clients who paid us big money, and we have good margins because it's consulting. So we now have money, and we believe in this company
Right.
because guess what? We are managing it and we know exactly what's happening. So why don't we go and
Mm-hmm.
put money into those? So we started actually acquiring part of those companies because of we decided to invest in those companies. So it was not only like we believing in what we do, no, we believe in what we do, and we invested our time, effort, and we invested our money. And at the same time, when you get part of
Wow.
the net profit, we got it and we added more and more. So we start owning more and more of those, and that actually helped us to get more and more money till at a certain point of time, those companies were diversified company in the field of IT and software services, another company in the field change management, sales, retail. It was a very diversified. And at a certain point of time, that I
Interesting.
think it was mid 2010, I decided that, you know what, all of this is really good. I enjoyed it. Like, I learned and I've been engaged in multiple domains and multiple sectors and multiple expertise, and I've been exposed to many things, like almost like as if I compressed maybe 15 or 20 years of knowledge or learning or work in just like 3 or 4 years. So now maybe it is the right time to go back and focus on technology and things that I really love. So at that time, I decided, you know what? We built this company. Until now, this company is known, and actually it's relatively big. I decided I should be selling my share in this company, liquidating all my assets, taking my money, and maybe starting a startup. And at that time, the startup that I want to start was something in the field of education. I love education tech. I love education in general. So I thought maybe I can build like the biggest university, complete based on technology. At that time, there was another early stage startup growing, and nobody knows anything about it. It was called Coursera. So for me, I was thinking, why don't, yeah, like those Coursera guys are good guys. So maybe we can do something similar that's actually relevant to our region more and more. That was in
Mhm.
end of 2009, early 2010. So yeah, so I decided to do this. Later on, the uprising and January happened, and everybody was actually consumed in many other things.
2011. Yeah.
Yes, yes, yes. So that's actually what
Hmm.
happened in 2011. And I realized that maybe it's not that, like, I don't want to be only involved in one company. Maybe I want to be involved in several companies, help them grow. Maybe it's my thing would be like, let's build the company that helps other grow. It's not like let's grow myself or build like a single company. So I wanted like to have a bigger
Right.
impact, or like what they say in Arabic, "قماشة واسعة" يعني. Like it's like more of a wider
Yeah.
impact, a blank sheet where you can actually do many things and help many people at the same time. So for that, I decided
Right.
I should go into investing other than just doing or building things myself. And from then,
Hmm.
like the story
Okay.
continue.
So
Yeah,
that was your first venture fund, so to speak, and then
it wasn't a
you
venture,
started in your.
and it wasn't a venture fund per se, like, because venture fund takes the
Uh,
form, of course, yes, of a GP LP structure and all of that. So at that
right.
time, I didn't even know what's a GP LP thing, and I didn't understand
Right.
what are the differences. But so basically, I just started writing checks later on, and giving people access to my office, because like were very few people in that office. I told them, like, guys, if you want to use my office, please come and use it anytime you want. So later on, when people start visiting us and seeing what we're doing, you say, you know what, you are an accelerator. So I told them, no, why are accelerator? He said, no, you know what, maybe you're not an accelerator, you are an incubator. I told, like, I don't know the difference between accelerator and incubator. He said, like, there are a few
Hmm.
differences. So later on, I realized that actually there's no difference. It's just like incubator had a very bad reputation, and it failed because it was completely driven by government. So a better name
Right.
came, which is an accelerator. Maybe some sophisticated guy said, no, incubator, because you give people spaces and you incubate them, and all nonsense. It's just like maybe say like accelerator at a later stage, but again, this is all
Right.
nonsense. It's just like cosmetics. Anyway, so people said this is what we're building, and I said, why not? Maybe this is what we're building.
Okay. And then Endure happened. What year was that?
In
That was kind of
2000,
the natural progression, right?
yeah, I decided to do it in 2000, end of 2014, because here's the thing. I was lucky enough to be investing in one company at that time. I was the only angel investor in a company, three super talented founders.
You you
Nobody wanted to.
you can name the companies, by the way, if you like. No problem.
Sure, sure. At that
We want
time,
people to hear about the
yeah,
pioneers of the ecosystem.
yeah. At that time, that the company was called Ninja SMS. So Ninja SMS, from the name, it's
Uh,
an SMS application. And why is Ninja? Because they built the same technology of Facebook hover chat, the same technology that you see it at Facebook Messenger on Android, where you have this hover chat for a messenger, like this round thing with the
right.
profile
Yeah.
picture. They built the same thing exactly for SMS, and they managed to release it
Hmm.
before Facebook released their first release by, I think, 3 weeks, and
Yes.
it was released on Android, and everybody know that it's really tough to monetize on Android for paid apps. And their first release, it's a messaging
Right.
application, and they didn't have a compose button, so you couldn't be starting writing a message out of this application. You can just reply a message. So you cannot, like, if you want to send you something, I cannot start using this to send you. I can just using it while I like
Right.
start chatting with you
Yeah.
after I reply to
The
your
cl-
message.
yeah the classic MVP.
And they
Yeah.
asked people on Android to pay $1.50. And to our surprise, we had 80,000 downloads in 3 days. A messaging application with no compose button.
Wow.
So, yeah. So that was quite
Yeah.
interesting. And
That's product market fit, right?
yeah, big time, big time. No, I was the only angel investor in that company. and a bit like I put very small check at the
Mm-hmm.
because most of my money were tied to other companies at this moment of time, and it wasn't that easy in Middle East and specifically in Egypt at that time for venture or investments because everybody was in a wait and see stage. So most of the people were actually afraid of taking any risks whatsoever. So it was a tough time for
Mm-hmm.
this, but surprisingly, those guys managed to do this. We figured out why don't we apply to YC at that time? So what YC at that time in 2000, late 2013, early 2014, were not taking anybody or very few people from outside the US. Like I remember at those
Yeah.
days, people used to be like criticizing Dave McClure for traveling all over the world trying to invest in startups in different markets instead of just focusing on startups out of Silicon Valley. And even like the guys at
Yeah.
YC were actually criticizing him publicly for doing this. So imagine when you decide
Okay.
three
So
people.
Dave McClure is the founder of one of the founders of 500 Startups, just for our listeners.
Yes,
Yeah.
yes,
Which is another
yeah.
competitor to YC or Y Combinator.
So
Sorry, go ahead.
everybody was like criticizing him for doing this, and we
Yeah.
decided, you
And,
know what, let's go and apply for YC. And when we applied for YC and the guys got in, it was the first company from all our region, including Turkey, to join Y Combinator.
yep.
That was in the year 2013. At that time, Paul Graham was still the one who's managing YC, and to our surprise, actually, Paul Graham speaks a little bit Arabic. Why that? Because
Oh,
he's
that's
he,
interesting.
I think he spent like a couple of years in Jordan, and he was like,
Oh,
and he was
never
real.
knew that.
Yeah, yeah, it's a very few
I
people
know he
actually.
spent some time in Italy because he wrote a blog post about that,
Yeah,
and he was learning art to be a painter,
yeah,
surprisingly.
yeah. You know, he has
But
this
I didn't
very
realize
nice.
he spent some time in Jordan.
You know this. He had this very nice book called "The Hackers and Painters." You know, that's like
Yeah, exactly.
it's because his way of looking how actually you can mix design, painting, art with technology makes a lot of sense.
Right.
And I think most of the jumps or the real breakthrough when it comes to at the product level comes from the fusion of the art world or the or the design world with the technology, which again we're seeing the biggest manifestation now in NFTs, but maybe we can discuss about this later on. But again,
Yeah, absolutely. So yeah, yeah. So now you have this angel investment. I like this.
and those
Uh,
company joined YC, and suddenly I'm already part of the big league. I I almost like trying to understand or
you're a co-investor with Y Combinator now.
in 2000 late 2013 and I asked the guys like I just want to be a part of your company, seeing and witnessing everything that's happening in your experience at YC. So I've learned their
Hmm.
tools, I've learned what they are offering, the perks, the agreements, Bookface, for example, this like similar to Facebook, but only for founders. How you build a community, the Thursday dinner, sorry, the Tuesday dinners, and what's happening there, what kind of discussion that they having with the founders, and everything. What kind of advice they're
Right.
giving them, and how they advise them in multiple things, and what their point of view. So I've learned everything, and more importantly, what I've learned that it is one of the most important thing is your reputation as an investor, because you know what, YC have this database for all the investors who invested with them or who raised or who invested in any of their companies either at the demo day or
Yes.
afterwards, where they have notes and comments about every single investor, at some time even at the level
Right.
of the company, at the level of the partner himself. And they used to
Yep.
be giving them numbers back in the day. Now they're not numbers,
Scores.
but they used to be giving them
Yeah.
scores. And guess what?
Yeah.
Scores can be minus. You can be getting a -2 or -3 or -7 or -10. I've seen those scores, and
Wow.
you'll be surprised. Like some of the biggest names, how like lousy they were getting scores in there, and how
Right.
other people like Andreessen Horowitz, SB Angel getting like 7 and 10, which is like the highest scores, and how people like
Yep.
Kleiner Perkins getting -1, and how people like like back in the day. So it was quite interesting that anything you do, anything you do, it's recorded
Yeah. Is
and you
exposed.
have a reputation and
Right.
exposed. So you need to make sure that
Mm-hmm.
you're doing the right thing and you are helpful and you are supportive as much as you can, because it's always recorded and people can go back to it. And this is what
Right.
creates your
It affects your
reputation.
deal flow. Right.
It affects everything. This is a business
Right.
of judgment and branding. So it's branding is
Mm-hmm.
tightly related to reputation, and your reputation gets you better deal flow,
Right.
gets you better in general, actually makes you do the right thing,
Fundraising is
because
easier.
of
Right.
course, and a lot of other things. At the same time, it's a business of judgment. You want to judge, like you want to make the right decision at the right time with the right amount. So it's a business of reputation,
Mm-hmm.
judgment, and branding. And again, that I saw it firsthand in
Right.
there. Just imagine the difference between what's happening in YC at the same time what was happening in Egypt, like or the Middle East, where investors are treated like gods, untouchable. Basically, whatever they say, it's just like pure force of nature,
Right.
and whatever they say, although most of us as investors are completely clueless, you founders think that like we're saying the right thing because surprisingly we might know better. Why that? I really don't know why. Why would we know better than a founder who's actually spending most of their time every day? It's not like because other people entrusted us with money, or maybe because we got lucky in some other things and we get some money. That means we know better than you, the founders. But anyway, that was the time. So imagine the paradigm shift between here and there.
So yeah, you learned all this. Yeah. Yeah. And you saw the mismatch. So what did you do then? You decided to start a fund?
Yeah, before I started doing this, I got 60x multiple on less than 12 months on my investment. So I said, like, this is, yeah, that looks good. I have
Mm-hmm.
60x multiple. So if I'm
Not
putting
bad.
if
Mm-hmm.
I'm putting 100K, now I'm getting like $6 million. No, six, 100, yeah, it's $6 million. Yes.
Right.
So I'm getting $6 million at no time. So I said, you know what? That looks like good investment. So I decided to do the same thing with another startup when I invested the first check, and later on, the startup joined another accelerator and another fund out of the US. So I got 25x multiple. I said, you know what? Like, that looks like a plan. Let's invest in startups coming from our part of the world, help them
Mm-hmm.
connect with other people or other investors coming from the US, or maybe moving them to the US. And it's like we are trading innovation, and it's like an
Mm-hmm.
arbitrage game. So I thought, yeah, that might be a very good thing. And why don't we build a fund around this thesis? So this is why I decided to start Endure
Mm-hmm.
Capital. And a very interesting surprise while we were starting Endure Capital at that time, which, by the way, at that time it wasn't called Endure Capital. At that time, it was called, the first name for Endure Capital was called One Tribe. And why is tribe? Because I was obsessed
One try.
with the with the concept of community, with the community and people coming
Right.
together and helping each other, and working with each other. So I wanted like to name it One Tribe, because like we are, regardless of your race, regardless of your religion, regardless of where you're coming from, your ethnicity or anything, it's we are one tribe. We have more commonalities because we're building startups together, and we
Mm-hmm.
want to build something meaningful that actually makes us one tribe that stands with each other, help each other, and build something meaningful. So at that time, to my surprise, my 60x multiple that I got it from Ninja SMS, by the way, at that time was paper multiple. Something quite interesting happened in late 2013, which is the acquisition that Facebook made, acquiring WhatsApp. So when Facebook acquired WhatsApp, basically WhatsApp was not that big at that time in the US, which was our biggest market for SMS, our biggest market for Ninja SMS, which later rebranded to
Mm-hmm.
Hover Chat, was actually the US. When Facebook acquired WhatsApp, it just killed all the potential for this company. And
For further investment, right? Nobody
yep,
wants to invest
yeah,
in
yeah, yeah. So yeah, so the
a company that will
60x
compete.
multiple I got on paper just disappeared. Yeah,
Well,
It
it's a
went to
lesson
zero. It
learned,
went
right?
to, yeah, yeah, yeah. It went to
No,
zero,
what year
and
was Endure, which was, yeah, what year was Endure founded in? Sorry to,
officially 2015. First closing for our first fund was January
okay,
2016. That was the official time
okay,
of our first fund, our first closing
mm,
for our first fund. At that time, I just
right.
want to
So it
continue
took a
something
while from
related.
that first lesson to the,
Yeah,
yeah,
yeah, and I just
sure,
want to go back to the first lesson of losing all the 60x multiple. So, as I told you, the founders were a very talented team, one of a kind team. So those guys, they didn't do anything wrong. You just like Facebook just acquired another competition and killed the potential and hope for
yeah,
us. So I was very disappointed, yet those guys did everything right, and I was lucky to be part of what they built. So I kept a very good relation with those guys, and I even offered the founder to join me building Endure, which was a quite interesting thing because at that time I didn't have like except very small fundraising and we didn't have money, so I was almost offering him nothing. Like, but but I said, like, you know what, you've done a very good job, you had this experience with YC, I love working with you, you're super smart, we're mission aligned. So I offered him and I offered another friend of us to join us, and we start like the three of us building Endure Capital in year 2015. But those guys, the two guys I got early on with me, we still wanted to build something and wanted like to be part of more into the operator
mm,
side than the venture side. So both left and got
right,
some interesting job offers from two other companies, both in UAE at that time. A few months later, this guy, the founder of Ninja SMS, he said, "You know what? You remember the company I told you about? It's a very interesting company. I joined as a VP of product. This company wanted to raise a round and wanted to expand into Egypt. So I told them, this guy who worked with us, and I think you should be raising from him if you want to expand to Egypt. So I met the guys, and he helped me to get in, and and this company was actually Careem. So my 60x multiple
right.
that I lost in Ninja SMS actually turned or was the reason that I got into Careem relatively early on. And this guy actually, later on he was promoted to the senior vice president. And this guy is Wael Nafa, and he's currently one of the best people who are working into venture because he just left Careem, I think, like 1 year ago or something like that, and joined another VC in Saudi Arabia. It's called Rad Ventures, one of, I think, if not the biggest VC in Saudi Arabia, at least it's one of the top two or three there. So yeah,
Wow.
so this is actually how things move,
So,
how things actually get
yeah, so the
developed over the
investment
years.
paid off at the end.
Yeah,
Yeah,
it paid off big
it's
time.
incredible how it all fits
To,
together.
to be part of the first unicorn exit and the biggest unicorn exit till now in the Arab region. Yeah, it makes a lot of
Yeah,
sense. And this is what happens in venture. In venture, you invest in people
right,
and you keep good relation with good people because at the end of the day, maybe like startups, most of the startups will fail. And you'll be crazy to think that most of your startups will succeed because it's not like like what yeah, like succeeding in a startup or a successful startup, this is the anomaly, this is not the trend, this is not the thing. So but working with good people, working with very competent people, smart people, building things with them, trying one and two or three things, this is the right thing to do. So for anybody who's
right.
thinking that early stage investment, specifically in our part of the world, it's all about the company and neglecting the founders, or saying like the common wisdom that comes from the West, it's just about the market, not necessarily like to have a great founder. In our part of the world, this is not true. It's all about the
Okay, so tell me
founders,
more about that. I
founding
mean,
people.
yeah, I mean, what kind of founder succeeds in the Arab world versus like the West? I mean, you're someone who's kind of invested on both sides of the Atlantic. So
Yes,
tell me more about that.
re- resilient founders. Like if you want to like say a big thing, Of course, smart, hardworking, blah blah blah, all of this kind of interesting things, but more importantly, resilient founders who are mission aligned, who are value driven. Sometimes, here's the thing: not all founders around us in the Middle East, even from the successful ones, are mission driven or that resilient, or sometimes even that ethical. To tell you the truth, like they cook numbers, they do a lot of very monkey business, monkey stuff, and for one reason or another, they are approved by their investors, and maybe sometimes their investors are encouraging them to do this kind of nonsense thing, and they succeed, and they might be like really known, and everybody's talking about them. But in reality, those founders are not there for the long term. Eventually everybody knows that they have a bad reputation, they copy
Hmm.
the numbers, they just like fluff, not doing the real thing.
Right.
The other thing, on the other side, on the other hand, if you have a resilient founder, he's mission aligned and his value aligned, even if he didn't succeed in his first startup, he will eventually succeed in his second or his third, because he has what it takes, and he's learning, and it's a learning process. It's learning
Hmm.
process for us as investors, it's learning process for him as a founder as well. So you need to make sure
Okay.
that you are working with people who are mission aligned, who have like the same value system, that you
Right.
are proud to be part of, or at least even if it's not exactly your value system, but still you are proud to adopt it or learn it from them. Like some people, you really look up to them
Hmm.
on their work ethics and how they work and how they get things done. And resilient people, this is really important. Those
Right.
are
And
the
when
most
you
really
say
important.
resilient, yeah. I mean, because someone like who's not from the Arab world would say, well, any founder anywhere has to be resilient.
It's Arab
But
resilient,
you mean
not
something like
not,
specific
not
to
Yunus
our region,
resilient.
right?
Yes, of course. Like I I
Yeah.
I remember like this was like
So.
that was an advice people telling for people in the US. They tell them, you know what?
Mhm.
If you have less than 6 months of runway, you should start getting your, like, why, like you said, like for people dying, like you get your affairs in
Start.
order. You start getting your affairs in order,
Right.
like get your house in order. So like,
Right.
and
Yeah.
like they're telling people here, like if you have less than 6 months of runway, so guess what? Most of the startups in here, it's not just 6 months runway. We are maybe talking about like 2 weeks runway or like 1 month runway. And sometimes people who are actually beyond the runway and they have nothing to offer anymore, but yet
Hmm.
they manage to continue and
Right.
building and to pivot things. So this is what I mean by
Yeah.
resilience. It's not like the definition of resilience,
And
because
that's because the environment is harder, right?
of course
Or is it the cash is less? Or
the cashless, maybe not as it used to be now, but still the cashless
hmm
environment is much harder. We have fewer people to learn from, and when we learn, we usually learn from our counterparts, our people who manage to build things but in different markets and in different countries, in
right.
order to learn and then unlearn, and to take it from best practice to best fit. That takes a lot of time. So
Hmm.
and time takes resources. Time needs, yeah, you need to have more resources. So sometimes people would think it's easier to start companies in here, and yes, I agree, it might be easier to start the companies in here because it takes less cost, all blah 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 on all of that, and
Hmm.
and relatively the cost of living is not that high, and all of this interesting things, especially for Arab founders who are coming from outside or might have some savings early on, so basically their savings can take them like a longer runway or things like that before they
Further
raise money.
along. Yeah.
Yes, of
Hmm.
course. But at the same time, it is easier to start, but it's much harder to succeed, and it's much harder to scale, because you have more crunches at resources at later stage, uh, either at the investment or technical talent or finding the right product market fit. And the way you work in emerging markets, unfortunately, you cannot just be building one thing and surprisingly just rely on others with very tightly governing SLAs, because you know what? SLAs means nothing in here. And most of the people, when you rely on them to provide part of the value chain that you're providing, or make sure that you, with your partner, providing something meaningful to your customers, in reality, you will find that other people that you rely on them as part of your value chain
Hmm.
might almost completely erase any value that you create to your customer, because they are not efficient enough. So back to our part
Right.
of the world, you need to build what is like being fancy called in the US a full stack
Or a
startup.
fat
Yes,
startup.
yes, full
Yeah.
stack startup. So it's like which basically it's like you have yeah, the vertically integrated startups. And guess what? It's not only vertically integrated in our portal, sometimes it's vertically integrated and horizontally integrated at the same time, because you want to try different monetization models and you want to try things like that, because it's not straightforward. It's not straightforward, and
Right.
it's changing, and it's changing rapidly. So whatever worked for you
Yeah.
a few years ago might not work for you now. And the moment people see a
Hmm.
company, like for example, when we first invested in a company called Maxup, which is a B2B for for FMCG products and things like that. So everybody was like, I do remember meetings with some other VC saying, guys, you're not even a startup. So where's the tech? And great, for me that was great, because if other people are not understanding the value of a company like Maxup, music to my ears. That means we are different, and that means we're right. While a non-consensus that again would result
Yeah.
to, like for example, like Maxup till now, what, like it's 80x multiple for our first check till now, and it's not unicorn yet, and it's almost 80x multiple. So like
Right.
at the first check at what like $4 million valuation, and now they are at 350. Like this is like
Hmm.
the difference so far. So yeah, so but now, like every week we have one or two companies doing Maxab like,
B2B
in a
marketplaces.
way, B2B marketplaces in a way, or a derivative of it.
Yep, that's true.
So yeah, so
And
this is the nature of startups here. So this is why you need more money and more depth, and you need more resources, because it's hard.
it's harder to scale. The infrastructure isn't there. The logistics partners, etc., aren't as mature. Legislation and legal
Everything.
aspects can change
It's
and are a big risk.
it's
Things
everything.
like that. So you need
It's
someone
it's everything.
with a really tough interior,
Yes,
right?
it's everything. You need a
Okay.
resilient person who knows
So
how to get things done.
this could be a good segue to ask you, when, I mean, you've partnered with a lot of foreign funds on many deals, so you talk to them, I'm sure, a lot. What are the biggest misconceptions you've found that people, who are kind of trying to understand this market, they kind of come with their own expectations? What are the misconceptions you've seen?
Yeah, I've seen people going through the period of devaluation that happened in Egypt, and that was really tough on foreign investor to understand that whatever money that they were generating, it
Yeah.
just like slashed by like two-thirds overnight. So
Yep.
that was
Hmm.
relatively tough. Some other people would be thinking, especially if they are a later stage or a PE like mentality, that actually this is
Hmm.
a short term thing. Most of the time, by the way, investors coming from abroad are actually longer term investors than actually investors coming from our region, because most of our region are used to what, like stocks, real estate, which two things that doesn't make any sense at all, like their economics and their returns that really don't make sense at all, and it's just benefiting because of the deficiencies that actually flooding all our markets. Like again, it's just like again, it's a
So
complete
they're actually
nonsense.
more long term.
Yes,
Yeah, the
yes,
foreign investors are usually more long term
except
because they understand the
except
venture
yes,
business.
except for the PE guys who were thinking that
Yeah.
at our very late stage, were thinking just like it's just like what, 2 or 3 year thing. And imagine if they think it's just
Right.
2 or 3 year thing, and they are faced with devaluation. Imagine the kind of
Yeah.
surprise that they are that
Exactly.
they had to endure. Yeah.
Okay. So, all right. So, in the Arab like world, what are the emerging trends you're seeing that are driving? I mean, there's a lot of like growth these days. It's
Yeah.
a young population, things are quite, people are connected, etc. What are the underlying trends you're seeing that are driving the growth in the region?
I think a lot of people realize that they cannot continue doing business the same they used to be doing it, especially after COVID, especially after everything, because like we were really,
Okay.
really behind in everything. And when you are making
Hmm.
money of thin air, you are not pushed or are not rightly incentivized to do more or to change things. But when you are faced with
Hmm.
challenges, when you realize that this real estate thing is nothing, where you think that real estate used to be a liquid asset, and you realize that suddenly you are competing with governments and suddenly you are competing with other deeper pockets, it doesn't make any sense for you anywhere to be part of this. When you have this brick and mortar thing, when you have this big retail thing, and you're thinking that I am retail and I combine retail with real estate, like what's happening in like the mall economies that we have it everywhere, either in Egypt or in GCC or in other parts of the world. And suddenly nobody's visiting these malls because guess what? There's a pandemic, and for several months nobody's paying anything, and everybody's squeezed.
Right.
You just realize that whatever you're building is not fault tolerant, and you cannot
Hmm.
continue like this. You need to be more asset lighter, you need to be more optimized, you need to change things, you need to adapt to things. Just like look at the highest, most valuable companies worldwide. Look at them, like
Right.
what, 30 years ago, what were there? Like maybe like you had Mobil, maybe PepsiCo, maybe like very interesting companies at that time. Like this is 30 years ago. Like that was like when I was
Yeah. GE, Coca-Cola,
maybe when I
all
was
these
just a
things.
teenager at that time. Maybe I just had my,
Right.
had my so like this is like really, really an old thing. And unfortunately, we're still living in it.
So
But look at the companies now. Who are the top 10 companies? And who are the contenders? And who are not only the top 10, look at the top 20. And look who's moving up. You will realize that you are in a
so
different world.
So you're saying that basically there people who are starting, the investor side of things in the Arab world are starting to realize the importance of tech and this whole like being up to date and having technology. And the pandemic, of course, as it has all over the world, it's accelerated this mindset.
Yeah, yeah. So basically, yeah,
Uh, but
what got you
but
here definitely won't take you there.
Yeah, and I think a lot of people would say that that actually applies for all over the world, everywhere.
Yep.
The brick and mortar companies are realizing they're in trouble and they need to figure out a strategy, and that it's not enough to just have to plop an e-commerce site on their website and that's it. They
Yeah.
need to think more deeply about how to work through things. But are there things like specific to our region that are more than yeah, I mean, there is this aspect of us being
Yes,
even more behind than the traditional
yes,
companies in the West.
and for that specifically, I think there are two big trends in here. Like if you look at sectors,
Hmm.
like it's more about the fundamentals. So basically, yeah, what I
Mm,
call fundamentals, I'm talking about healthcare, talking about education, talking about banking. Like these are fundamentals, and we lack
right.
in every single aspect of them. Like our
Mm,
education, most of our schools, like come on, it's a joke. Most of our healthcare providers and hospitals, like again, don't get me started into this. Like there's nothing. So
right.
we are in a bigger, we have deeper and bigger needs. Let's not talk about e-commerce and retail and all of that because maybe it's, surprisingly we have some big names coming out of this. But what is the big education institute coming from our part of the world? What's a big healthcare institute coming from our part of the world? So we have
Right.
big telecom coming
So
from this part of the world. We have big retailers coming from this part of the world.
right.
Sometimes even like brands or fashion or things like that coming from this part of the world. But healthcare, education, you have nothing. Banks. What's a big bank?
Fintech.
Like banks in general, like like
Yeah.
big financial institutes. Come on, like our biggest financial institute was what, a branch? ended up with a big scandal, fiasco. like,
Yeah.
like we have nothing into this, as
Okay.
part of this. Maybe like what in
So
a
you're
bank,
saying the gap
NBK Bank, for example, in
is
Kuwait.
bigger,
Yes, it's
right?
huge and it's needed big
There's
time.
so much more to build, and this is promising. Okay, and what are, to balance things out, like, what are the big challenges that you meet as you like scale up a startup in our region?
The challenges, there's a lot of things, definitely. Primarily, the biggest challenge would be human capital. Human capital is a huge
Hmm.
challenge, either technical human capital or at the very top level, like the C level, because yes, we have several people coming from the PepsiCos or like the P&Gs of the world, and wanted like to join you. But guess what? They're coming with a completely like different mentality, and they're trying,
Mm,
instead of trying like to unlearn and learn, they just wanted to say that what had worked with us in those
right.
companies, and we just want to apply it in here. Let's have
Hmm.
lengthy meetings. Let's have fancy PowerPoints. Let's do our discussions and use our charm for 1, 2, 3. Let's make sure that
Hmm.
we have the right budget and we maximize the budget and we make sure that we spend it to have bigger budgets. Let's rely on people who are telling us what we should be doing from head to HQ. Or let's
Right.
go for a business transformation, a digital transformation project that will last for like 3 years or something like that, and everybody would be happy. This is complete
Yeah.
nonsense.
Doesn't work.
It's,
Yeah.
surprisingly,
Okay.
still working there. I don't know how it's working there for them, but again, good for them.
Hmm. Yeah. Well, I mean, they probably have more like waste. They can waste versus where you have very small resources. You need to be very scrappy and to really get that equation
Yeah,
right, I guess.
yeah, and I think
So we
again
can't
because a lot
afford
of
to make these mistakes, so to speak, whereas they might be able to.
yeah, and to tell you the truth, maybe because another thing, most of those top executives in here are just top executives in Egypt or in Middle East. So in the grand scheme of things, you're just like what?
Yeah.
They are not
They
the
don't see the
people
big
who,
picture.
yes, and they are not the people who are getting anything seriously done.
Decision makers.
Yes, they're
Right.
just being told, and they do a great job in following a playbook. Maybe they have their
Execute.
own way of customizing
Right.
things and execution, which is great if you have the right brand name. But just move the brand name, take them out, put them in
Hmm.
a startup, and it will be complete non waste of your money and time
Things are
to get
different.
them in
I
your
agree.
company. Unless,
Yeah.
and those are very few. And if you find those few, it would be great, because if you find the
Hmm.
right learners and the people who can actually who succeeded into doing this, and at the same time understand the nature of startup, or adaptive enough, or good learners, or can learn, then you get somebody who's completely phenomenal and out with this world. And this is like a keeper. You should get them, and you give them
Right.
the maximum resource, because he's seen both sides of the world, and he's able and capable of
Hmm.
like take or make the right decision,
Yeah. I
which
agree
are
with
very
you so
few.
much about this challenge because I've actually made this move myself from the corporate to the startup world. And I thought I had learned before. I studied very well, what the
Of
difference
course.
is between startups and corporates,
Yeah.
etc. But it ended up not to be enough, actually, in the sense that not only do I need to learn the new way, I need to unlearn the old way. I need to actually
So,
stop doing some things that were very successful and were very good in a corporate mindset. And that was harder. It's harder to unlearn than it is to learn, and it took more time.
because you
And
succeeded,
I
and you
think,
succeeded massively doing those old methods or the different
yeah,
methods.
exactly. Success is a worse kind of almost thing than in this case
Yep.
than failure. And so yeah, I mean, I totally I want to underline the importance of what you're saying there. Okay, so I wanted to go to like ask you kind of a future thing. I mean, when you imagine what industry or what sector the first $100 billion startup from the Arab world is going to be. I mean, you've already invested in the first $3 billion plus, value exit in Careem. What do you think would be like the next, our first Stripe or Uber or or something like this? Which industry do you think it's going to
Yeah.
be in?
So I wish Uber was over 100 billion because I still have Uber shares, but they didn't get to 100 billion yet. But anyway,
Yeah, yeah. Oh,
uh,
you know
yeah,
what I'm
yeah, yeah,
saying. Yeah.
of course, of course, of course. But
Well, I mean, tens of billions of dollars. Now, let's not be too specific around the
yeah,
number
I,
here.
I I believe companies that actually work and again serving fundamentals, and by fundamentals I mean infrastructure. But again, it's not like a generic infrastructure. It is smart infrastructure. That's something that sometimes they call it index companies. Like in each sector, you have an index company. Like in fintech, Stripe is an index company. So everybody is usually processing payments through Stripe, for example. In cloud, Amazon. Amazon is big in everything. But again, AWS is an index company when it comes to cloud. So everybody's using it. Nobody, like everybody doing something, well, there's nothing will touch AWS, either completely touching it or building on it, or at least touching it in his like life cycle. Even now, if they are Google Cloud, for example, they used to be at a certain point of time on AWS, or at least tried AWS. I'm sure of this. So those kind of companies, what we call index companies, which at the very like heart of any sector, those companies are going to be big, and we have few of those. We have very few of those who started actually in the Arab region, and like I'll not be announcing a name. Let's say there's a company we were lucky
Why?
because there is a big announcement for this startup for our investment in the coming weeks. But let's say that the first time we invested we were the first money, and we priced this company at seed stage price has never any other startups at seed stage had been priced at. We priced them at $50 million pre. This is a seed investment
Yeah.
from this part of the world. So yeah, like at the maximum I've
Yeah, I
heard, maybe
mean,
it was like what,
even
like
in the US,
30.
that's a
Yes,
big,
yes, for
valuation
seed, yes,
for
that's a,
seed.
yes. And we de-raised and we invested again few months later at 110 already. So currently they're already above $100 million in valuation, and this is the round that we'll be announcing. We'll announce everything at that time. And I truly believe this is going to be a unicorn in less than maybe like 18 or to 24 months. I'm sure of this because we've already in talk with some other people, some other things. And again, this is a company out of Egypt. It's not a company that operates in a different markets and maybe coming to Egypt, thing like that. And it's an smart infrastructure company. And I do believe this specific company can reach this $10 billion valuation in less than 5 or 6 years time period. So this is one.
Well,
Another,
I can't wait to hear the announcement.
yep, you'll hear about it because it's not only 50. It is like one of the company at highest valuation because you joined YC. If it will be maybe now people will know it at the time of demo day. It is almost one of the highest valuation at time of demo day across the history of Y Combinator. So those guys are not only making history at Middle East, they're making history even
Yeah.
at YC. And I believe they were one of the most liked companies as part of, compared to all YC companies early on, and this based on the YC partner. And most probably, they will be raising the biggest Series A round, or it's not actually Series A. It's almost seed as well, although it's 110, but still seed because it's not Series A. It will be raising the biggest seed round that have never been announced in any of the companies across Middle East or Africa or maybe even Pakistan. So yeah, so they're making a
So
lot of
great.
history
That's
here.
great news.
Yep, yep.
Happy to
So
hear that.
super
So,
excited about them.
uh, yeah, I'm sure. It shows. So, okay. So let me ask you. I was going to ask you something else first, but this has kind of brought me to what do you look for in a founder in a startup? You know, in that first email pitch, or if it's an email pitch,
Yeah, here's the thing.
what
I,
what catches your eye?
I don't like email bitches. Like I really get swarmed by those kind of emails. I like to say that if I, I again I'm not that easy to reach to, but if somebody wants to meet me, he will manage to meet me because Like he can get me in a meeting, he can give me things, and when he gets me in a meeting, if he managed to do this, that would be the best thing because we start discussing. I start having a feeling of who this guy is and who he built before. He tells me about his history, why he's doing this. So he will tell me many things that I wouldn't be able to know it because of a pitch deck. Like there is a company that we're currently investing or currently looking at. They have one of the worst pitch decks I've ever seen in my life. But again, I think it's a great company. So if I only looking at their pitch
Yeah.
deck, I
So email, yeah, you wouldn't be impressed. So what made you say this about them when you met them? What
because
what was it? What's important for you?
it's important for me for people who are resilient, who are resourceful, who get things done. So this guy was actually a good guy. He's like he managed with very limited resources to do something really big. He's always optimizing. He's looking at the right KPIs, and he's doing it for the right reasons. So these are the most important thing. And again, we're not looking at a specific sector per se. Yes, we might have sector affinity. We've learned few things, and we might be loving one sector more than other sectors. Yet when people come and tell us, you know what, there's this nonsense thing or something that you never heard of before, and you start pitching it, yes, we get excited about, and we get even more excited because he's looking at something that very few other are looking at. Same thing happened
Yeah.
when Bilal came and pitched, and we've talked about Maxib. Same thing happened at that time. Nobody was talking about B2B grocery thing. When Blake were talking about supersonic travel, like everybody was thinking like
Yeah.
supersonic, like this nonsense. Nobody would be actually capable of doing that. But he was crazy enough to talk and say, you know what, like there is something in there and it can be done. And he
Yeah.
start telling you how it can be done. So this is most
Right.
of the time is much more engaging and more important to listen to new things. Again, for Tamer, for example, Tamer of Aspect Biosystems, who is doing 3D printing for live tissues and organs. So the first time he told me this, like my question, how is that even possible? Like how do you print a kidney? How do you print a lung?
Right.
And do you implant it or not, or what's how it's used to, and how this related to personalized medicine? Like this complete a complete new thing. Nobody would think it is even possible before, and he's doing it. So you cannot say that, you
Right.
know what, I'm want to invest in deep tech 3D printing for life tissues and organs. I don't think any investor with the right mind 10 years, like 6 or 7 years ago, would have even have this in his head as a thesis. I don't think, because that needs like a very sick head
Yes. Of
to have
course.
it. You find like, yeah,
Yeah. Well, it requires some imagination.
yeah,
So that actually that reminds me of like Boom Supersonic for me is one of the companies in your portfolio that I really love because I can't wait for them to actually achieve their mission. You know, being able to quickly travel anywhere at $100 tickets, as they say. And but at the same time, I'm sure that it's hard to kind of as an investor, to convince yourself that this person in front of you will be able to achieve that when
especially,
nobody else has. So how does that happen?
yeah, especially that this person specifically is a software engineer.
Exactly. He's not a airline. He started from first principles.
Yes,
Exactly. So yeah, I mean, tell me more about that. How did that happen?
but again,
How did he
afterwards,
convince you?
afterwards,
Mm.
afterwards, actually, it was the other way around. I was the one who was convincing him. I was convincing him, please take my money, get me this
So
one.
yeah, you went in after YC, right?
Yes, I went
In the
after
YC
YC,
demo day,
and
right?
a lot of people, because he didn't want to raise a lot, and he was oversubscribed, and I was trying to get my way
Mm-hmm.
into this. Like imagine a small fund coming from the Middle East that's literally nobody, trying to convince this very hot startup that everybody wants to get in, and he doesn't need any money, at least at the moment that we came in. trying to convince him of your value or trying to convince him to take your money. That wasn't easy.
Right.
But again, you know what? It happened, and it happened early on. It happened before Mike Mords. Actually, so I invested before Mike Mords. I invested before the Collison brothers of Stripe. I invested before Steve Jobs Trust. I invested before Reid Hoffman. So I invested before all of those guys, which are legends in the Bay Area. But
Yeah.
yeah,
Everywhere probably
yep, yeah.
in the
So
startup world.
yep, yeah. So basically, I invested
Definitely.
before all of those guys, and we managed to get it done. This is something that we've learned. You cannot, you cannot be disrupting an industry from inside. You cannot be an insider and disrupting an industry. Let's say you cannot. Maybe you can, but
Yeah,
it
it's
is a very slim probability that
mm,
you'll be
an insider.
an insider and disrupt an industry massively. You might
Mm,
optimize, you might change, you might fix few things, but definitely, you will not be able to disrupt the industry completely unless you are someone who's like really different. And
so
again,
okay,
look at every single aspect. Like the again, so the Airbnb guys were not hotel owners or didn't used
of
to
course,
be
yeah.
managing like what dorms or things like that.
Elon and Tesla.
Of
Yeah.
Careem, he was
Yeah.
not a definitely he was not a
They
taxi
were
driver.
consultants.
Yes, he was.
Yeah.
And again, so and Blake, he's not an air engineer.
Not an
He's not like
right.
an aviation executive or something like that. He was a software engineer who managed to sell his first company to Amazon. That's it.
Right. So can I maybe go from Blake's story to, can we go into one of your investments? You can choose any one.
Sure,
And can you, like, for the benefit of founders listening who want to pitch to you, for the benefit of budding investors, new investors that are starting in the region, can you tell us, like, the mechanics of how you reach conviction of that specific startup? Uh, you know,
sure,
you can choose anything you want in your
sure.
portfolio.
Mm. It's Brimore. It's Brimore.
Interesting. That's the one I was going to say. So that's very
Okay.
interesting that we
Yeah,
both
yeah,
thought of it.
yeah. So yeah, so Brimore for me, here's the thing. Yeah, you find this great, just very interesting two founders who have been through a lot. First, they raised some money from mm, angel, not so angelic investors who actually drove them to the ground, they pushed them to sell whatever they owned, to sell their house, to sell their car, just to return the money for them because the company was not working at that time. So instead of supporting them, they were actually a liability on them, although they were made. So for them, what you were what exactly you were losing. Yeah, you definitely are not losing your house, your car, or not delaying your marriage, for example. And that's what happened for those founders. And when those founders
Oh God.
told me that we had to do this, that we had to do this, and we came out of this, and we continuing building this. So you have all my ears, regardless of what you're building. You have all my focus. I'm not telling you that you should be doing this, but sharing some showing by practice how resilient you are. Again, I'm not advising you at all to do this. There's a lot of people who didn't do any of these kind of things, and they were successful, and we invested in. But it shows conviction. It shows that they want to build something that it means a lot for them. This is one. Second, when they come and again, startups comes in different sizes and shapes and different concepts. There's always some philosophical debate about our aspect of looking at startups. Like for example, looking at Brimore, there's a continuous trend from between like coupling and decoupling. So when you think about things, you would
Yeah.
say
Bundling and unbundling, right? You
bundling and
mean, or do you
unbundling or
mean,
coupling on yes, exactly. Like
yeah,
for example, go for like
industries? Yeah.
different industries. Like
There was a famous quote about this, right? There was a VC who said the history of business is about something being bundled and then being unbundled and then being bundled again,
yes,
in,
it has been always there, but it takes
yeah,
different manifestation every cycle. So you need to understand: is it bundling or unbundling? And is it actually
right.
are aligned with it or not? Like the concept of social commerce and community sell, people are resellers selling to their community of friends, it has been always there. Like Oriflame,
Right.
Tupperware, Yvonne, like it was always been there, and it's always been around
Yep.
women selling to women primarily. But
It's
it
true.
was
Yep.
only like most of the time, it was like the production company pushing their products and tightly coupling it with their distribution channel. So it's your
Mhm.
own, you're selling your own products bundled or coupled with your own distribution channel. So those guys said, you know what? We've seen very good products and very nice products that needs the leverage of trust. If you can unbundle this model and you can have this distribution channel or distribution systems or the distribution infrastructure unbundled from production, where you can plug it into many other people or many other producers, there's something there. There's something there, but
Yep.
you need to have,
Yep.
you choose the right products, because you need to choose the best products because you are leveraging trust in here. So if a lady is selling to her
Right.
friends, so and she sold them something that's not working or it's not good, they are seeing each other every day. and, and
Yep.
and 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 again, يعني, women talk. يعني, basically they do. So يعني, when they talk with each other and they talk about the products, and if it is a bad product or bad quality, that won't fly. So you need to make sure it's a very good product, but now you're giving them a fair chance to compete with other products who has very optimized value chain distribution, thing like that, because you're building a parallel distribution channel, and that fits perfectly two two like growing trends. One is actually a cyclic trend, which is the bundling unbundling thing, unbundling the production from distribution. This is the cyclic
Hmm.
part, and it fits another trend in the field of e-commerce. So e-commerce, when it started early on, it was about somebody producing something and be able to sell it. So it was primarily
Right.
production. It's production driven. Later on, after production, it was the time of Amazon. Like it was primarily what it is, logistics driven. So when you think about Amazon, Amazon is data and logistics, and when and our data is data about the products and about the thing like that. So it, and most of the big e-commerce back in the days, it's about logistics. It's logistics driven. Optimize every single aspect because you want to, you work on a smaller margin, work your cash flow, your inventory turnover and everything. So it was logistics driven completely. The third wave
Hmm.
of commerce is not product driven, it's not, or production driven, it's not logistics driven. It is actually what we called reseller or seller driven, which is the social commerce part. And if you
Hmm.
abstract this and look at this bigger trend, you can see that even omni-channel influencers on social media, those are actually whatever whatever they're building
Social
is,
comms.
it's a
Yeah.
social commerce. It's basically reseller driven or seller driven, because here
Right.
what the influencer, the somebody who's selling on different channel, not only the website, the things like that,
Right.
it's focused primarily on the seller or reseller. Either the seller or reseller, like a big celebrity with many followers, or a micro influencer, or maybe no, not like this, it's just about the Misho model, the social commerce model,
Right.
or maybe Bindudu, like we're actually friends buying with each other, or maybe streaming or streaming commerce. So all of that, it's all about people who influence your decision making, people who can actually sell you something, people who are leveraging
Right.
trust. So this is a growing trend that's happening. So the moment
Hmm.
you put your head around this concept, you have a conviction, because it's always good to be riding a wave and to be at the very front of a wave. So you need
Of
to
course.
abstract,
Yes.
understand what are the previous waves that we've been there. So it's like production driven, logistics driven, and now it is reseller or seller driven. And this is for us, social
Okay.
commerce, and this is for us is Brimore, with the unbundling of production and distribution.
So the founders communicated these things to
No,
you, I
they
guess.
didn't.
No.
No, they
So
didn't.
these were like trends that you saw. Yeah.
It's They talked about it,
So
but
what did they? Did they have just some traction and they showed you the
they
traction?
had, they had good traction, and again they had this conviction this thing was going to happen, and they start explaining in their own words. It is on us as investor or somebody who can actually believe in this, who can think of what's possibly can be driven out of this, and how you abstract
Right.
things and understand things. Because guess what? Their job is not to understand trends, different trends, because this is not their job. Their job is actually to understand a problem that they want to solve. And for them, it was completely clear that there are people who are producing good products but lacking the right distribution channel. So they wanted to to level the playing field for them, for people who don't have
Mm,
access to good distribution channel. That
got
was
it.
it for them, which is great. But for
Hmm.
us, we need to understand, is there a bigger cycle in here? Is there a bigger trend in here? Because that this is great maybe at the start, but would that be something that would be massive? Would that be something can actually Egypt only or in other markets as well? And what's needed to grow to other markets? What are the characteristics? What are the things? Because when we want to invest in something, we don't want to invest in something that gonna be big at the country level and that's it, or big like maybe they're doing what like tens of millions of dollars and that's it. No, we want to go for much bigger, much bigger. And the ability to see this at early beginning is something that's more important than any other thing. So, as a founder, you should tell me in your own words how you think this is going to work, and maybe help me to understand an abstraction, or maybe like let's have like lengthy discussion. Let's have brainstorming. Let's have dinners. Let's have walks. Let's have whatever, just to understand what this
Right.
can, how it can unfold, and what
Hmm.
surprise, what positive surprises can come out of this model later on.
And what's a big turnoff for you? I mean, what should a founder not do? What when they do that, so that's for you, you realize that you don't want to work with this person.
Again, it's about their values. It's about why they're doing this thing. So if we are just in this thing because we want to exit, or just in this thing because we what because it's a great opportunity, regardless of whatever, are we doing that because it will get us a lot of money, which again money is important, or you know what, everybody's around us, everybody like wants to invest, so you have like a couple of days to either to say yes or no. It's good to be assertive, but my answer is no. It's easy. So if you just giving
Hmm.
me that, like I'm really fast at making decisions. Like it's known always as Endure Capital is one of the fastest in making decisions. But if you come to tell me that I should be making a decision in 1 day or 2 days because like everybody wants part of your company, great. Let everybody have them. My answer is no.
Right. Okay. So on the flip side of that, let me ask you. I mean, have you ever said no and then regretted it and
Yeah,
felt, maybe I should have
of
noticed
course.
something? Can you tell us like a story or an example of that?
Yeah, sure. In
What happened and
Egypt,
what you think?
I
Yeah.
said no to Instabug. At that time, they were called A-Star Labs, I think. At that time,
Hmm.
when I said no because I didn't really understand what they were doing at that time, and I regretted this. And I tried later on to invest. I think 2 times. We're good friends. Like we have good relation. Yeah, with the guys with Omar Mu'taz
Yes.
and everything. But I regret not investing in them. And I tried to do it again, but I couldn't get into it. So yeah, so that was one
Uh,
of my regrets. Here in Egypt and the US, I passed on Robinhood. Maybe I don't have
Ooh.
a big regret now because of what happening around few things, but I unfortunately I
Yeah.
passed on them. I passed on several interesting unicorn. I passed on Musically. Musically basically now is
Uh-huh.
TikTok.
Yeah.
So I
The
passed on
TikTok.
Musically.
Yeah.
Yes, so I passed on that one as well, which was quite
I don't blame you
interesting.
for that one. It wasn't that obvious that
If I've
and TikTok
listened to
did a
my
lot of work on the original product. Yeah.
Yeah, if I've
Oh,
listened to
if
my
you've
daughter,
listened to your
my daughter,
big
I would
mistake there.
have, yes, I didn't listen to my daughter because like when she knew that, yeah, I passed on Musically, or I made the founders Musically, she said like, come on, like this is nice. I use it a lot, and I told her I didn't know that you're using it, and why that? So
Yeah.
I wasn't being really attentive to what she's doing, but anyway, So I passed on that musically.
Yeah.
What else? I passed on what?
So why
Uh,
did you pass on
yeah,
Robinhood, for example? I have a feeling you're investing in something similar now.
yeah, I'm trying to redeem myself. I'm trying
Here in the region, I mean. Yeah,
yes,
so
Thunder, and it's doing a very good job. They're doing a very good
yeah.
job, actually. Uh,
So, so why did you pass on Robinhood? I think Vlad seems like a really strong founder as well.
Yeah, I didn't get the business model, to tell you the truth. I know there might be
Mm,
something that can be driven and coming out of that, because that was really early on. And again, يعني, when were introduced by a common founder, like by common investor who invested in them, and then
hmm
he introduced them to us. And I didn't see it. I just didn't see that this company can be a mover, a real force, a mover and shakers in the stock markets, or like actually can like build or destroy the economy.
Right.
Yeah, I didn't see
So
it.
what's the strangest pitch you've ever?
I stopped actually being surprised by very strange pitches, because like I've seen a lot, and I invested in few of them as well. Yeah, not a strange one, but I thought there was no value in there, and I just put like a small comment about it on my social media, and suddenly everybody saying, you know what? No, this is a very good idea. That was a company suggesting to
Mhm.
you what you will have in work, what you will have for lunch in work every day. That's it.
Oh, interesting.
That's it. So I said like,
And people said that it's interesting.
yes, they said no, no, it's a big problem. Like every time it's
A
consuming
big
what to have
problem.
and what not to have, and it's about, and food is
Right.
about discoverability, and to choose it in work. It makes a lot of sense because people would love to share food together and work, and again,
Mm,
for efficiency at work, you need something that like
that's quick.
gets quick and
Yeah.
suitable. So when you have a deeper
Right.
look at it, it might have been a good one. I missed that. I don't know what they were, what's happening for them
What
now.
happened?
That's what happened. So
Yeah.
I don't know. But surprisingly, people said, no, no, that's actually a good thing, and it might be a big thing.
Okay. So we've spoken about founders, about startups in the region, what they need to take care of. We haven't really spoken about VCs. So I mean, what do you think is different about being a VC in the region here versus in other places or in the global markets?
Yeah, I think. Luckily, till now, it's not competition is not as fierce as in the US, because if you are a fund or
Yep.
a fund manager in the US, specifically now, even if you are Sequoia or somebody, you're really in a tough situation. Why that? Because
Yep.
you've been squeezed from above and from below. Like angel investors
Yep.
who have good money, who have enough money, and who has like hands-on experience and have the right connections, who can help you in recruitment, who can help you in your product and everything. They can write you checks really fast, really fast, like
Yep.
100, 200K checks at whatever valuation that you want, because we all
Totally.
understand potential is much higher. I've heard at some point of time now they have templates of term sheets ready on their WhatsApp, on their Messenger. Just send it to whatever, and
hmm
just sign it on WhatsApp or Messenger. So and now this is actually happening more and more in India as well. So
So
you're
here you don't have that.
no, we don't
Yeah.
have template on WhatsApp yet. Not yet. Not term sheet templates. No, we don't
No, I
have
mean
them.
this type of competition or the
No,
really
till now it's not. It's sometimes for the company that's really good, and people think this company is gonna go places. Yes, you have fierce competition, but not necessarily this kind of companies will end up to be the best companies. Till now, few of the companies that we invested in, when we invested, nobody else wanted to invest. Nobody else wanted like to touch them at all. And they turned
Mhm.
out now to be one of our most successful. As I told you, like Maxtab, nobody wanted to at the very beginning to invest. Like it's all way overvalued. It's not even a startup. And same thing, we
Mhm.
said it when we are 21, and when it's at 140, they say, you know what, like this too outrageous. It's good, but it's too expensive.
Too
But
expensive.
yes, but now when they are 350, now they have a second thoughts. And whatever they missed it at 21 and 4, they want to be part of it now at 350. So yeah, so sometimes this is the case. Some other cases, for example, I wasn't an early investor in Breadfast, and I missed Breadfast. I missed Breadfast when they were only raising what they were raising 250K. That was the total ask
Hmm.
for them for the first round, and maybe like 150K. And I have this pitch till now, and I missed it. Although the guys are friends of mine, and I love them, and I think they're great guys, but I missed investing in them.
Hmm.
I, I redeemed myself later, of course, and I invested and I invested big time. I met them at the early beginning. So sometimes
Right.
it's not that obvious. And the very beginning, very few people wanted to invest in them as well. Now everybody is competing to get part of it.
Right.
So yeah.
Okay. So so you're saying that's the difference
No, I'm saying
between
the
like
competition part. The
VCs here
competition.
and
Yes,
yeah, the competition part is kind of is not is
we still privilege in a way in here as investors. It's not a fierce
right.
competition. It's specifically at the very early stage. It's not that furious as
Hmm.
outside because outside you are squeezed from below from this angel investors from micro funds and things like that,
Yep.
and you're squeezed from above from the like of Kutu and Tiger and
Exactly.
D1s where actually those guys like
Yep.
whatever what the yeah, I can give you $100 million, just give me good traction and show
Yeah.
me that you have a good team.
SoftBank.
Yes, and
Yep.
now you have my $50 million wired to you. That's it.
Exactly. Yeah. I
So
mean,
it's, people are squeezed, like the Sequoias and
yeah.
benchmarks and all those guys are squeezed, and this is
Absolutely.
why those guys started to look at our markets now
The
because
early stage in our markets. Yeah.
they're squeezed in their
Hmm.
markets already, and you want to still
Right.
find relevant people and relevant successes elsewhere.
Okay. So I mean, it's been we've been talking for so long, and I haven't gotten to ask you a lot of things on the script. So, but I don't want to take up too much of your time. Maybe I'll end with some quick rapid fire kind of questions. Quick question, quick reply, and then
Shoot,
we can
yeah,
close out.
yeah,
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 sure.
sure.
So the first one is, what one or two books do you recommend to people?
Okay, there is this book called The Founders at Work. It's an old one by Jessica
Oh yeah,
Livingston
Jessica Livingston.
Of
Yeah.
YC. Each chapter is talking about a founder or a company back in the day. So it's not
Hmm.
a new one; it's an old one. So you'll be laughing because they were talking about how when electricity went down, their servers actually was out of business, things like that. So again, you don't have this kind of issues anymore. But it's always interesting to
Hmm.
see how things were and how people talk because Jessica managed to to ask the right questions, and you always have this right motivation about things. So whenever you're feeling down or you want to learn something or conceptualize about things better and better, just read her book.
Hmm.
It's amazing. It's a very good book. This is one.
Plus one
Uh,
on this. I love the book.
yep, yep. It's
Mm.
really nice. No, no, no.
The second one.
The other book actually, I would say like read any book that's not necessarily business related. Read history book about startups, about how they started, about venture capital, and there are many titles in here, but it's important to understand the history because it shows you the connections, it shows you who's who and how things are evolving. You cannot really understand what's happening around you or what can happen later on without understanding the history, without understanding trends and what's happening in trends. So those there are many books talks about this, and sometimes even novels talks
Hmm.
about this. So you need
Yeah.
to read those. Don't read things about what will happen in the future because if believe me, if people really knew what will happen in the future, they would be building it instead of writing about it. So don't read about it.
Yeah.
Yeah, don't read about what's happening currently. This is what article is for. So don't read a book about what's happening currently. So when you read
Right.
things, you read things about what happened previously and understand how this actually resulted in what's happening currently.
Right. So, second question. If you could go back 10 years from now and talk to your previous self, what advice would you give yourself?
Yeah, don't mess on TikTok. Maybe. No, I don't think I would change a thing because I think whatever that I know now is an accumulation of my mistakes and errors. So if I didn't have those mistakes and errors, maybe I wouldn't have learned whatever I've learned now. Maybe if I can go
Okay.
back, let's do more mistakes, let's do more errors, and you learn more. Maybe, but
Well, yeah,
but
be more adventurous.
yeah, but if you think about that, if
Mhm.
I've done more mistakes and more errors, maybe I wouldn't be able to be right where I am now because I'm already dead or out of business. So yeah, so I think
Who knows?
yes,
Yeah.
who knows? I wouldn't change anything. So this is like
Okay.
I think the safest bet.
So, okay, third question. What's the piece of advice that you give the most to people that you don't, or that you have trouble following yourself?
Focus.
Okay. No, that's a one word. That's a perfect rapid fire response. What should I have asked you that I didn't ask you?
I think you covered everything, but there are few things. Maybe like it's technical things about what should a founder look at a VC, because most of the time you ask the VC what you look at a founder. It should be sometimes the other way around. You as a founder, what you should look at a VC, how you can say this like the right investor for you. This is actually an
Hmm.
important thing. But since you didn't ask, I wouldn't
Yeah.
answer it.
Well, this will be in our follow-up podcast interview, so be prepared for it.
Sure.
Maybe in a bit of time. Not now. Don't worry.
No
All
problem.
right. So, last questions. What can you tell me about, like, a gift that someone has given you that has helped you become the person you are now? I mean, and I don't mean like a physical gift necessarily, but something that you remember, that you appreciate, that someone helped you with. So to
Yeah,
end on a note of
I
gratitude.
yeah, yeah, I have, I've been lucky, and I've been lucky. A lot of people give me many things, and like my mother gave me like the gift of understanding the value of helping others and being there for others. That's a huge gift. I've seen her
Of
giving
course.
everything that she had like to others, teaching them physics and math completely for free for our neighbors. She was an electronics engineer, but she used to be investing in stock exchange, and she used to be investing her money, and later on she used to invest her friends' money and neighbors and other people, and she done it completely for free because she wanted to help them to have an extra passive income for them, because she said like, I'm doing it for myself, why don't I do it for others? So, and everybody loved her for this, and she was doing that. So I like, that was a big gift to understand the value of actually helping others, and the value of being relevant, and the
Mhm.
value of paying forward. Yeah, so yeah, so this is one thing. And
That's
yeah,
well,
there are many things. I've been really lucky in
that
my life.
it's a beautiful sentiment to end on, Tarek. I'm very happy that you shared this with us. Thank you very much for your time. I loved it. And lastly, is there any place you'd like, where people can reach you, or hear what you're doing and follow you? If you'd like to mention that, go ahead.
Okay. Like in our website now is actually, we're changing it a little bit, but actually in our website you'll find most of our news and everything, and you'll find our email and our team, because we have now like much bigger team than we started with, and again most of them
Mhm.
or actually all of them are very competent and would love to help and support all entrepreneurs. So yeah, so stay tuned
Wonderful.
to our new website.
Right. And it's for our listeners, it's endurecap.com,
Yep,
correct?
yep, yep, yep.
Yep. Okay.
Correct.
Thank
Thank
you
you.
very much, Tarek. It was a pleasure hosting you, and looking forward to our next conversation where I will remember to ask you that question.
Most welcome.
Thank you.
We'll be looking forward to it. Thank you, Ali. Really enjoyed it.
Thanks. Thank you.
Bye bye.
Bye.
Thank you for listening to this episode of Startups Arabia podcast. If there was something you really liked about what the guest said today, reach out to them on social media and tell them what you liked. And of course, if you haven't subscribed yet, what are you waiting for? You don't want to miss any of our great upcoming episodes. Also, please rate us and give us comments on our social media accounts so that we know how to improve. And also tell us what you like. We don't mind hearing that either. Until next time, this was your host, Ali Zwail.